Okay, so imagine you're like, you're trying to time the market, right?
Right.
You want to buy low and sell high. But it feels like every time you try, you like miss the wave.
Yeah. Yeah, it's tough.
Yeah, I mean,
Like catching a falling knife, right?
yeah, that's it.
Yeah.
Catching a falling knife, it's like you're always getting cut.
Yeah.
And that's what we're diving deep into today, how to use these market indicators. We've got this awesome educational article that's going to help us avoid uh, avoid getting sliced and diced by the market.
Exactly. Exactly. We're going to help you read those charts like a pro. We'll go beyond like the basic stuff, and like really get into how these signals can help you actually make some smart trading decisions.
Perfect. Because honestly, I've always been kind of intimidated by these technical indicators,
Right.
Like I get the idea of trend lines, moving averages, but actually using them to like pull the trigger on a trade.
You're right.
It's a whole other ball game.
Yeah, I know what you mean. It's like you got all these fancy ingredients, but you're not really sure how to put them together to make a meal.
Exactly.
So first things first, we got to realize these indicators, they're not just random lines on a chart. They tell a story. They're
Yeah.
like clues, right? Like you're a detective trying to figure out what the market's going to do next.
I like that. The market's a mystery novel.
Yeah, exactly. And these indicators are like those little hints you got to pick up on. They give you insight into market psychology, momentum, and all that. Let's take the MACD, for instance.
Yeah, the MACD. Oh, man, the MACD. Like, I hear that one all the time, right?
Right.
People throw it around. But, like, what does it actually tell us? I couldn't explain it.
Okay, so let's simplify it right. Imagine a stock price. It's going up.
Right?
Sounds good, right? But is it like gaining momentum as it goes up, or is it kind of losing steam?
Okay.
The MACD can help us figure that out. So if the MACD line is doing its own thing, like it's heading down while the price is still climbing, it could be a red flag, like,
Yeah.
hey, this upward trend might be running out of gas.
Oh, so it's like a warning sign? Like,
Exactly, like a canary in the coal mine.
yeah.
Okay.
Yeah.
It might be time to like rethink your strategy or
Oh,
whatever.
it's okay.
And speaking of rethinking your strategy, right? The article mentions these things called reversal patterns.
Oh, yeah, the reversal patterns.
Ever come across those in your trading?
I have.
Yeah.
I see those funky-looking charts, right?
Oh,
Like the
right.
head and shoulders, the double tops.
Yeah.
But honestly, I've always been kind of scared to, like, actually base a trade off of those,
Sure.
They just seem so subjective, Like one person's head and shoulders is another person's, I don't know.
I get it. But think of it this way. These patterns, they're not just about the shapes, right? They're like footprints, right? Showing us where traders have been stepping.
Okay.
They reflect shifts in sentiment. So like that head and shoulders pattern you mentioned, it often means that selling pressure is building up. The smart money, they're starting to head for the exits.
Oh, so it's about understanding, like, the psychology, right? What's
Yeah.
going on in those traders' minds.
Exactly. It's all about reading the room, right? But even if you're like Sherlock Holmes of the stock market, right?
Right.
You crack the code, you got the perfect entry point.
Yeah.
You got to protect yourself on the downside.
Risk management.
Risk management. We can analyze indicators till the cows come home.
Yeah.
But if we don't protect ourselves,
Yes.
one bad trade can wipe out, weeks, months of gains.
I've been there. I've felt that pain.
We've all been there. Stop loss orders, they can be a lifesaver.
Absolutely.
But if you set them too tight, you can get stopped out of a winning trade prematurely, right?
It's true. It's such a delicate balance.
It is. It's the dance, right?
Yeah.
This article actually recommends thinking in terms of risk-reward ratios.
Okay. Risk-reward ratios. Tell me more.
So aim for trades where your potential reward is significantly higher than your potential loss, right? So if you're risking, let's say, $100 on a trade, you should be aiming for at least $200 profit, if not more.
Okay. So, like, don't be afraid to, like, let those winners run, but cut your losses quick.
Exactly. Don't be a bag holder,
Yeah.
And another thing, position sizing.
Oh, right. Position sizing. Yeah.
Don't put all your eggs in one basket,
Mhm.
right? Only risk a small percentage of your capital on each trade.
Makes sense.
That way, even if you hit a rough patch, you can weather the storm.
Yeah. Stay in the game for the long haul.
Exactly.
Now, the article also talks about using multiple indicators to, like, confirm your signals, right?
Yeah.
Why is that so important?
Okay, so picture this, right? You're going on a road trip. Are you going to rely on just one road sign?
Probably not.
No. You're going to use a map. You're going to check traffic reports. You might even like ask for directions, right?
Yeah.
Just to be sure. It's the same thing with trading. You want multiple indicators all pointing in the same direction
Okay.
before you make a move. So if the MACD is saying, hey, this trend might be weakening, and then you see a bearish reversal pattern forming, that's a much stronger signal.
It's like having two witnesses instead of just one, right?
Exactly, exactly. More confirmation. You're building a solid case for your trade.
I like that. A solid case. Yeah.
Yeah, you're not just jumping on any signal that pops up, right? You're doing your due diligence.
Mm-hmm.
But you know what? Even with all the right indicators and the perfect strategy,
Yeah.
there's one more crucial element.
Oh, let me guess. Is it the mental game?
The mental game. You nailed it. This article really hammers this point home.
Oh, it's huge.
You gotta avoid emotional decision making.
Yeah.
That is the biggest trap.
I'm so guilty of this. Like when I see a trade going in my favor, I get all excited, right?
Oh, yeah.
Hold on, way too long, hoping it goes even higher. Then bam, it reverses.
Oh, yeah.
Panic sell
Yeah.
bottom.
Classic. We've all been there. But the key is to develop this disciplined approach to trading.
Okay, disciplined.
Almost robotic.
Robotic, yeah.
Stick to your plan. Don't chase profits.
Don't chase those profits.
And most importantly, learn from your mistakes.
Oh, absolutely. Turn those losses into lessons, right? Don't dwell on them.
Yep.
Wow, we've covered a lot today. We went from defining these indicators to actually how to interpret them, how to manage risk,
Right.
even master the mental game of trading.
It's like we've given our listeners the keys to a high-performance sports car.
Yeah.
Now it's up to them to get behind the wheel, you know?
Buckle up and hit the gas.
Yeah. Learn to drive that thing.
And speaking of driving, the market's constantly giving us signals, right?
Mhm.
It's like talking to us.
Always talking.
So the next time you're looking at a chart, ask yourself,
Yeah.
what is the market whispering to me right now?
What's it telling you?
Yeah, exactly.
What's the story?
Think we can talk for 80 minutes because I have a lot of charts actually. So I think those are enough to talk about 80 minutes.
I
So
think I won't be able to give you 80 minutes today because I have more things lined up already.
Okay, then let's just talk 30 minutes if you only have 30
Okay.
minutes.
No problem.
So here's the first chart. But if you have 30 minutes, well, I should focus on the most important charts, but I don't know which one they are.
No problem. I can give you 40 minutes.
Okay. Okay. So here let me see, what do I want to say about that chart? Well, it's just at the last top, we had a bear signal here and a bear signal here. And here also we had a reversal. And we don't have that right now. So for now, I don't think the top is in, and a lot of charts confirm that the top isn't in. So I just want to take a look at that. And I don't want to talk much more about this chart. Do you have any question?
Oh, no. You
Okay.
can go ahead with a different chart.
Here's a chart that I use for divergence, and as you see, we had quite a lot of divergence here on that top. 1, 2, 3 indicators, so they all confirmed, and now we don't have any divergence.
Okay.
So I'll keep on going, and you tell me just if you have questions, okay? So because I want to talk about the most important charts, and I think they're a little later. As you can see, I put a brain all the charts I want to think about and talk with you about, and even the hearts. And there's a lot of charts, you know. So I don't want to spend too much thought when it's evident what I'm trying to point out. Here, this one is interesting because it gives you these crosses. And the first one is red, then you get blue crosses until you reach the top. And the top, you get a yellow dot. Here again, you get a red one. And then until the top, where you get a yellow dot. Here again, there was one red, but it was shortly followed by a yellow dot. And right now we had the first red, and we are now in the first green cross. Blue cross. And as long as we get blue crosses, the top shouldn't be in. If we go back, computer is a bit laggy, so even though it shouldn't be. Here also, you see, well, there was one wrong. Well, no, it wasn't actually wrong. It was the yellow dot was at the top or close to the top. So it's just me
On a
say
weekly time frame, though.
it's a weekly time frame, yeah.
Okay.
Yes, it is. So it's hard for me to go back because when I'm also talking to you online, maybe it will be better if I turn my video off. It's a little laggy. Maybe if I turn the video off, it should be better. Let me
It
see.
would work with both.
Let me see. So maybe now it's a little less laggy. Let me try, but I don't think it changed anything. Yeah, it's a little less laggy, actually. It has less to proceed, and then it's a little faster. Now it's a little faster, which is better. Okay, so any more questions about that?
Nothing as of now.
Okay. Here we have one that I selected. I just did it because I'm interested in the red spaces, which show correction in a bull market. The red show correction. Always when you get red, you get a correction. And green says that we are
Market is still in an uptrend.
In an uptrend, yeah. And when you go to a bear market, then the greens one are corrections. And the trend continues when it goes red again. Green is a small correction and trend continues when it goes red. So in a bear market, the greens are great to selling points. It's a great moment to take a short position, the green, in a bear market, yeah? And it's the opposite in a bull market. It's a great moment to go long when you have the red. When you're in the red, then it's a good idea to think about a long position. Here the red, a long position. Here again the red, a long position. And here again the red. Well, this time it was a heavier correction. So here you need more indicators to tell you that it will take a long time. But again, here is the last red you get. And then it flipped green. And now, well, now we can hold the position as long as it is green.
Okay, sounds great. So until it doesn't changes the color, we can hold that.
Yeah, but there are more than one indicators that tell you that. But it's good to look at several just to see if they confirm. And here I'm interested in that indicator. When it's the most bullish, you get the green candles and they reach the top. Okay, and now it's the most bullish. And you only should think about it changing when you get a candle that isn't green anymore. Then there's something changing. Let me see if I can scroll back. I can't because I want. Oh yeah, I can. So let me see if I can scroll back. So you see here, once we did get gray and then red, you should worry because then the bull market might be over. But now it still looks good. Any questions?
Nothing.
Okay, great. Let me switch to the next chart. This one. Here again, you see the same thing, but this time you get dots. as long as the dots are the pink dots, you get the pink dots. The uptrend is quite strong. When it ceases, you can get a small correction. And here again, the uptrend was quite small, and then it ceased, and you did get this time a large correction. Also, you can look at the slope. Here the slope is already pointing down, and here the slope started pointing down with the red dots. But now we have only 2, and right now nothing is pointing down. So this is extremely strong, and it's just something to be aware. Any more questions? But all the charts I said you tell the same, because all the indicators should give the same message. You know, if an indicator says something totally different, maybe there's something wrong with it, or there's an issue. But they all should collaborate. So a lot of charts will just confirm what I'm saying.
Okay.
Okay, I like this chart for several reasons. Well, we can first take a look at the first one. When you get the green dots, well, it's bullish, red is bearish. Here you see in the bear market, it was all the time bearish. Even this didn't give a green. It still stayed bearish. So it still tell you to look for short opportunities, but no long opportunities. And here you did get one, you can call it a fake out, but then you switched very soon afterwards again red. And now we are green, so it's all nice. But I want to focus on the second chart actually, which is a great chart because it gives me these reversals indications, and they are quite accurate as you see. Here both of them were quite accurate because we dropped. Here again, that reversal said we drop again. That reversal gave us the big correction we had, and that reversal indicates us the uptrend we just had. So that's awesome, an awesome indicator, because it worked really, really well during this bull market. And it doesn't work 100% like all indicators, but this time it worked really, really well. It's just when you see one of those reversal indicators, you should think and you should ask yourself, will I get a small correction? Will I get a big correction? How much downtrend could there be? But it's a good moment to think about either taking profits or taking a long position. Like here, it would have been a great moment to take some profits, and here again a great moment to go long again, because you could just put the stop loss below that candle, which is a candle with a lot. The wick was very deep, so it showed you that there's a lot of buying pressure at that level, and it would have been great position to put stop loss just under it. Actually, I did, but I take a lot of position in a bull market, and sometimes I get stopped out, and other times I can keep the position. For example, today I did get stopped out in the last position I took. No, the position I took was yesterday, and today I did get stopped out because price dropped below my stop loss level. But it's just one position. Now the question is, should I take profit on my other positions or should I keep? And I think it's good. Right now I haven't decided to take profits on the other positions, even though the last one did stop me out, because it all still looks very, very bullish, and I don't really have a reason to exit, you know. And the other positions are all at break even, so I won't lose any money on them. But it's just that they are very profitable right now. And if in the worst case scenario, it is now the top, even though none of my indicators say it, and all my stop loss will hit, then I don't lose any money, but I would have lost all the money that I have on paper right now, you know, all the gains that I have.
Yeah.
But it's just a way. It's just my way of trading. I'll take a lot of positions, and I don't mind being stopped out 8 or 10 times, okay? Because I have some positions that make up for all the losses, you know, and normally if everything goes according to plan. But yeah, so just different ways of trading. I know you have a very different way of trading than I do, but that doesn't matter.
Yeah.
That doesn't
Every
matter.
individual has their own way of trading, but as long as it is profitable, it doesn't matter.
Yeah, exactly. That's what I wanted to say. But I still enjoy having somebody with whom I can talk a little about trading. For example, well, let's not make too much chit chat, because if I do, then I won't be able to show you the rest of the charts. So let's just
No.
go through them, since you are limited on time. Here, well, here there are these crosses that are interesting because they show reversals, and the blue ones give you good long positions. And right now we don't have a cross. And here down here, the last indicator is a new one for me. And when it goes green, you're in an uptrend. When it goes red, you will have a correction or a downtrend started. But right now we are 100% green, so not much to worry about. And here, what is nice, there's a bar, a blue bar. And if you go above it, it is bullish, and below it is bearish. And now we are above. And the candles are green. So all that is nice. How much time do you still have?
I still have. Let me check. I still have 15 more minutes, 15, 20 more minutes.
Okay, here that was the indicator we talked about, and we can now see what happened. I told you that I really like this indicator. It's a MACD indicator, and I told you I really like it because we're making higher lows and higher highs. You see already here, I told you, I think we saw each other around this period, and or this one, close to here somewhere. We saw each other, okay, in this period. And I told you we are making higher highs and lower lows, even though the chart didn't tell you that clearly. Okay, yeah, you see higher highs and higher lows, but I liked it on the indicator. It was really a strong message to me. And as you see,
It was showing higher high formations, but and all, even if the chart wasn't showing the higher high formations, it was sideways, but the indicator was showing higher high formations.
Yeah, exactly. Well, because here is no higher high. You know, that's still a lower high. That's a higher high. Yes, that's a high lower high, and this is
That's actually
higher low.
sideways.
But anyways, here that looks really sideways, but this did already look very impulsive, very uptrendy.
Okay.
So this indicator worked fine and was nice to look at. Here, why did I show you that? Well, it's just the line. Actually, as long as it's green, it's bullish, and when it gets red, well, then you will have a correction or a bear market that started. And right now we are green, so everything is nice. Here, I just want to take a look at this one. For a top, you get a sell signal. You see, every top here we did get a sell signal. And I think it's very rare that we don't get a sell signal at the top. And right now we don't have a sell signal. Here's one more indicator. Okay, the blue is bullish, the red is a small correction, and in the bear market it stays red all the time. So now we are blue, so that's fine. And those little dots, the green ones, for example, are a good moment to go long, especially if then the cloud turns blue. And the same thing here. The red one is a good moment to go short, especially if the cloud afterwards goes orange. Okay, but now the cloud is all green and we don't have any red dots. So nothing to worry about. Here, I just wanted to show you that indicator, the first one. I think I don't want to talk.
Can I ask you a quick question?
What are you saying?
Can I ask you a quick question?
Yeah, sure. Go.
Like, what do you do with all those indicators? Like, are you working on any projects or something like that?
What do you mean?
I mean, what do you actually gonna do with all the indicators? I mean, do you take trades based on that?
They help me to have a vision of the market. They help me to be more educated and to trade. Yes, they help me in making my opinions.
Like, if you have some,
I'm a trader. I take a lot of
against.
I take a lot of positions. I also do day trading, as we discussed last time, and I take a lot of positions. So on different markets, and all those indicators help to form my opinion. And I just like looking at them. It's when you're passionate about something, you don't look at all the time and all the effort you put on it, you know. Mm-hmm. But you just enjoy what you're doing. But I don't understand the question. What do I do with it? I use them for trading. It seems obvious to me. What else would I do with them?
I mean, like, if you have all those indicators and if some indicators goes against you, so isn't it making any conflict in your trades?
Yes, but trading is a hard job. You won't have 100% certainty. There's never 100% certainty. You had a lot of convictions about the market the last time I saw you, and you thought we will break out, and we can see the indicator if we go on. I showed you the resistance levels, and you thought we will break out, and you were actually right. Okay, now that's awesome, especially if you traded it. But the thing is, your convictions, just as my convictions, are worthless. Okay, don't matter. Everybody has convictions. It's BS. It's a sound in the wind. It's a fart. Okay, a conviction is nothing. What counts is how you act, how you trade, and what I want to say is like. Your conviction is really bad because, for example, if you play poker, when I talked to you to mix this, afterwards I played a poker tournament and I won it. But look, for example, I get the best hands, pocket aces. Okay. Now there are a lot of situations where I should go all in with pocket aces, but there are situations where I shouldn't do that. And there are situations, even if I have pocket aces, and even if I thought I was winning on the flop, on the turn, but the river shows up, and the river isn't good for me. Okay, it's like one indicator telling me, no, this is a problem. This won't go. This here I might lose. I was ahead until now, I think, but now on the river, everything might be the last card. Everything might be different. Okay, then. There are even possibilities that I have to fold against a bet, certain kind of bets. So it's just, and my winning percentage is stratospheric. You cannot have better than pocket aces, and there are situations where you have to fold. You know, so it's just the conviction is good for nothing because convictions puts you in a very bad situation. You have to learn what to do. With what card, how to play and what to do. And it's the same in trading. And that's why I think that day trading, if you have the time for it and the money, because it won't be a lot, most of the time it isn't really profitable, but it is great because it puts your mind in a state of trading and analyzing. For example, I never was really profitable until now with Forex trading. But I still do it. I still do Japanese yen, the Mexican pesos, euro, dollar. I'll still do it just because I analyze the charts and I take decisions. Okay, and I try to just limit my losses, so it isn't that expensive for me to do it. But I do the exercise Every time I see an opportunity, I do the exercise, even if I don't make money at it. It's just a good thing to do. You know, sometimes you go in the gym and you do some work just to get fit, okay? And the thing is, you only need a couple of really profitable trades, and you can manage to go through a lot of losing trades if you have a couple of really profitable trades. So, and you won't get them because you won't act if you're not in a consistent spirit of trading all day long, you know? That's just my opinion. Not every trader acts like I do. Not every trader has the time. Not every trader has the money. There are a lot of reasons why not everybody trades as I do. And there are traders who are more profitable than I am. So all that doesn't matter. But I think if you have a bull market like this and you take 2 or 3 positions, that's very few. And I'm scared that you might have a good position, but you don't know when to exit. And I'm not sure that it will be that great if you only take 2 or 3 positions in a bull market. I like more to work more on my trading and try to improve constantly, you know?
You want to maximize the gains, basically.
Well, it's not just the maximizing the gains. It's, you know, the gains, actually, I think the gains take care of themselves. They take care of themselves. First half of this year, I wasn't that profitable. Okay, I even the first 6 months, I tried so many stuff that I even lost a little money. But it doesn't matter. I made it all back in a very, very short period, and right now I'm really profitable. You know, so it's just you must be willing to trade, and I traded a lot. But you must be willing to trade for 6 months, for even 6 years, even 60 years if it takes it, and just lose money and don't care about it. You just have to work on your skills. When your skills are good enough, you will make more money than you use. Now, look at Daniel Negreanu. He's one of the best poker traders. And it's the same thing for poker. He makes sometimes millions, 7-10 millions a year. Okay, but last year he lost 2.4 millions. Okay, so even if you're the best in the world, you will lose, and it's the same with trading. And you have to know that Daniel Negreanu is a madman. He plays 12 hours a day. He wakes up, he goes into a casino, he wakes up around 11. At 2 o'clock, he goes into a casino to play live. He plays until 4 o'clock in the morning. When the tournament stop, he goes to bed. He wakes up again at 11 o'clock. At 2 in the afternoon, he's in a casino and he keeps playing. And he does that nearly every day of his life. Okay, non-stop. And he did that for decades to be one of the best. And still, he will have years where he loses millions. And his expected value is huge. Okay, it is very high. He makes more money than he loses, but he still will have years where he loses money. So it's just to say, even if you're a really, really good trader, you must understand that there might be years where you lose money, even if you do everything right. But if you improve, you should manage to survive. You know, you should manage to over a decade to make more money than you lose. There can be 1 or 2 years where there's an exception, but over a decade you should make more money than you lose. Okay, I think you're out of time. Any questions about what I just said, my rant, or any thoughts?
Nothing.
Okay, so in that case, we'll talk again and we'll see.
If you are like, I can, let me check if I can reschedule it so that I can give you 40 more minutes. Would you be done in 40 minutes? Like your charts will be done?
Yeah, sure. I did half of the charts right now. And there are, as you can see, all the brains, and we're in the middle. And there are nearly half of the brains left.
Just give me 2 minutes. Let me just message about rescheduling it. Would that be okay?
When?
Right now, like just give me 2 minutes. I'll be just rescheduling it.
Just think about it and send me a message, okay? And then maybe I'll see you later, okay?
If you are available, you can just give me a minute. and I'll just reschedule it and we can continue. You don't even need to end this call.
Okay, then I give you a couple of minutes. Go ahead.
Just a minute. Okay, you can continue.
Okay. So here I want to show you that chart because it gives you a channel. It makes a channel, yeah. And now right now we are in a very nice up channel, and just nice to see. Also, the chart is great because the second indicator, when it's red, it's a very good moment to think about, to ask yourself the question if the bottom of a bear market is in. You see? So I just wanted to show that. And I like the uptrend we are in.
Yeah. Everybody likes the bull market.
Here we get red dots, and it shows you as a red candle when you should think about a correction or the start of a bear market. And here you had a red candle, which comes because of that red dot, and we had a correction. And here we had a green one, and we went higher. You know, a green one, we went higher. A red one, be careful, it might be over, and there was a long correction. But now we don't have any red ones.
Okay.
Okay, here we see the indicator with higher highs and lower highs. And also we have a reversal indicator which worked great here, but not so good here. And the other one that is interesting is the blue dots and the red dots. Okay, the blue dots price starts rising, and the red dot, like here, price or here,
is showing the change of trend, I guess.
The price drops. Yeah, it gives you an idea of a change of trend. Here, for example, the green dot was great because it was really a good moment to take a long position, you see? And you could have held it at least until here, which would have been very nice. And here again, this one, the green one, is actually also quite good. That's a good candle to go long. And yeah, you wait until you get a red one, and we don't have one right now. Now this indicator, I want to focus on the green bars and the red bars. When you get a red bar, think about a long position. Think about a long position in a bull market. And in a bear market, when you get a green bar, you should think about a short position. And here we did only get one, but well, in this bear market, there were no green bars. But I have another indicator who shows you what I tried to show you better. And it will come very soon because we haven't looked at it until now. So that's all I wanted to say. There are also the below that, the purple and the green ones, which also are interesting. The purple for paying attention to a correction or the start of a bear market, and the blue for a new uptrend. And right now the green, and right now we are in a green one. As you can see here, we are in a green one. And here you had a danger warning with the purple one. But at the top. I mean, at the top before the long correction of more than 200 days. Here, this an indicator I think you liked last time we looked at it. So let's focus on it. I told you, as long as we have green, you don't have to worry. You don't have to worry. And last time I made a mistake. I told you that those indicators is 3 times the same indicator, but I told you that it's on a different time frame. That's not true. I changed the setting. It's not the same setting, so I made it more aggressive. The first one is the least aggressive, and the second one is in the middle, and the last one is the most aggressive. But as long as it is green, you don't have to worry. Start worrying a little when it goes blue, because maybe it's just a small correction, but when it goes blue and then it goes red, well, then you should be more careful, because then the correction should be longer on the first one, and you get the same signal just faster on the other ones. But the first one is the most important because it's on the highest time. It gives the strongest signal. If the price did enough to break through with the first one, then it is stronger than here. But the second one, as you see, gives you a little earlier. And the third one also gives you a little earlier. It's just nice to have, you know? And here it also gave you after the downtrend, it tells you that now we get a small uptrend, because the last one went green very fast. The other one was still blue in decision, but the last one went green very fast. And here again, the last one went blue very fast. So you should think about that it might be over, and then it confirmed with red. But anyways, it was still in a downtrend if you look at the higher ones. It's just that right now we don't even have blue, so everything is smooth sailing. You know, we have nice wind and everything should be fine. It should be fine. I think you liked that indicator last time.
Yeah.
Here, this one is interesting because it gives you some candles where you should think about taking, for example, a long position. It's the same indicators, but on 2 different time frames. The first one is the 2 week, and the second one is the 1 week. But here, for example, you get the triangle, and it was a good candle to go long. And you just should look, because it just points out certain candles like this ones. It pointed out both of them, and you should have been careful when you see these 2 candles, because maybe the uptrend wouldn't be as strong as you think, and there was a correction. So, and here again we did get this one. So it's just interesting to look at. And at the top, for example, here on the 2 week, you see that he gave the top and he gave you 2 warnings to sell at the top. And they were great places to sell both time during the last top of the last bull market, you know? And here also this top on the 2 weeks chart, he did get the top again here. So that's just awesome. So it works quite a lot of times, not always. As you can see here, you also did get one on the 2 weeks, but it wasn't confirmed on the 1 week. But this one was meaningless. So, but also here you were breaking out over resistance, and unless you thought that the bull market would not continue, you would ignore that triangle. But if not, you just keep it. You just keep your position and hope for the best. Okay, we talked about this indicator also, and I told you that I'm not sure if it repaints. So I don't think it did a lot of repainting. But just when you get the triangles, you should be careful, you know, because the triangles might signal a start of a bear market. And here, I think it's one of the first times that you get a triangle and we manage to go higher. Because maybe not. But these triangles, even if they didn't say that, even if it didn't give you the message of a top, they did give you a message of a very, very big correction that lasts over 200 days. So they are not meaningless. But right now, as you can see, we don't have any new triangles. So that's also good. Why do I show this chart? Let me think. Well, here, for example, as you can see, you did get a green triangle, and it was a really, really good moment to go long because it was the bottom of the last bear market. Here we did get a red one. I'm talking about this triangle, and it was also the signal of a great correction, and here the signal of the really long correction of 200 days. So it isn't meaningless, and you should pay attention to it. Okay, this is the indicator that I also talked about last time, and I told you it gives you the strength of the momentum we have. And once we drop, like here we did, there's no more momentum in the market, and then you get a correction. Okay, and then it gives you again for the next impulse. It gives you again. It goes blue, as you can see, and then it goes green, and it did a try, and now we're green again. And as long as it doesn't drop, you shouldn't be too worried. And just think about what is happening when it drops, because it might be a signal. When it drops in the bull market, it might be a signal that it tells you the momentum has stopped, and in the bear market, it tells you also that the momentum to the downside has stopped for now. And you then ask yourself in a bear market, is it the bottom or do we still get a new impulse? Like here, this wasn't the top. We still are now in a new impulse. But as long as it stays, don't be too worried. But just start thinking a lot once it drops. And right now, it didn't drop.
Okay.
This indicator I just want to show you because of the reversals. Here the reversal was great at the top. Here the reversal was also great at the top before the correction. So those two corrections he did get perfectly right. So the reversal indicator is something to watch. Now we don't have any reversal.
Okay.
So unlikely that the trend stops here. That was the indicator I showed you with, let me focus on it, with resistance. And there was a lot of resistance. And now we did manage to break through it. And now the resistance is support. But don't think too much about it. It's just an important level. I mean, if you crash all down to here, that wouldn't be great news. And we would have to think a lot. But we will get some support. It will hold for some time. It should hold. You shouldn't go through it like butter. It should resist a little. You should, even if a bear market is there, you should get something like here, a small correction, and then maybe you go lower. But now it's support, and we managed to break through it.
Okay, yeah, that one looks interesting.
Let's focus on the second chart. So I told you that we have the pink, but I think we need a purple actually for our top. Let me see if I can go back. Here you see, during the last top, we did get pink and then purple. And right now, we don't even have pink, I think. And purple is also missing. In this entire bull market, we did never reach purple. And I would be very surprised if the top is in before we reach purple. Because we did reach pink here. Yeah, but we are still missing purple. So this to me tells me that we should go a little higher.
Okay.
We are close to the finish. And here, why do I show this indicator? Well, I actually wanted to talk about this one, where you get the strength of the trend. You see, As long as it is green and yellow, I think it's very bullish. When you get purple, there might be a small correction like here. You can see it both. You see the lines, so you see where it is on the chart. But here you did get a correction because it was purple. Then it went yellow again. It was really, really bullish. Purple, you get a correction. Then you get a red, telling you to pay even more attention. And then you had the long correction, which took a long time. And then we went all green and yellow again. And right now we are green and yellow, no purple. So
that means we are still in a strong trend.
Exactly. And here I want to focus on the first indicator to start. And when it touches like here, when it breaks down like here, it might be the end. Here was the end of the bear market. It gave you the great candle to go long. That's a perfect candle to go long. It was really, really the best candle to go long. And your stop loss would have been so low, so small, because you could have put it just below the low we made. So it would have been just nothing. You would have risked nothing on this. And you could have held it until to new highs, or even until close to 100K, since we are close to 100K. So your risk reward on this trade would have been gigantic, like 30 or 50. So you would have risked a very small amount, and you could have made 30 or 50 times that amount, depending on where you want to take profits. But that was a really, really interesting moment in that candle. And every time when it touches, the green and the red touches, then it's important. Here also it was an important moment when the green and the red touched. And right now something different happens if you pay attention. The green line goes up and the red line goes down. So the mouth is widening. And that only happens when you have a very strong uptrend in a bull market. That's the last phase of a bull market. But it's a really impressive phase when the mouth widens, because it doesn't happen much. I would have to go a lot back to show you that it did the same thing during the last bull markets we had. But it's just a very interesting moment, because it doesn't happen frequently when they widen. Okay, so I like to see them widening. And here, I just want to say the red candles in a bear market are good opportunities to take a long position, like here. The red dot here also was a good position to go long. This one was also a good position to try a long position. This one was also a good position to try a long position. So all that is great. And let's see if it did the same in the opposite in a bear market. And it did. For example, here, this would have been a great opportunity. If you're not short already, then this would have been a really, really good opportunity to take a short position. And you could have put so maybe don't take it on you have to wait until the candle closes. Huh? So here you have a green candle, you have to wait. But the second candle, when it closed and it gave you a green, then you could have put actually a stop loss over the top of the green candle. So it was great. And it works great in both ways, as well in a bear market to take short positions and in a bull market to take long positions. No? So all those ones where we were asking ourselves, what should we do and so on, the indicator told you. It told you even what candle. It told you here, go long. Okay, this one you would have been stopped out if you didn't take profits. But here again, it told you to go long. You would not have been stopped out. And here also, it told you to go long, and you would not have been stopped out. And it would have been two great candles to go long. So it's really, really interesting to see and pay a lot of attention to it. And here you see the same. So this indicator gives this to you, but it's maybe more visually appealing. Okay, and it makes maybe less errors. So here it tells you to go long, a great candle to go long. You know, here it tells you to go long, red. Great candles to go long. You get a lot of them. Great candles to go long. Here it also tells you to go long. Well, this one, if you, depending on where you put your stop loss, it might not have been that great. But if you took, because this candle went lower, but this one is very, very early. You should have thought about this. It would have been better if you thought about going long to this one. But anyways, just in a bear market, here again, you get green. You see? Green here.
It is for going short.
And you go short. And the next one confirms it by giving you red. Okay, so maybe it's green and green again and green and green. But if you get a green and then you switch to red again,
then it's time to stop.
I mean, you get the it's time to take a position with a not too wide stop loss and see how long you can hold it. You know. Okay, that was all. We looked at all the charts. So now I'm just interested in your final thoughts, and if you still have some convictions about the market. You can have convictions. It just, you should be worried about your convictions, because if you have convictions, like with pocket aces, then you go all in. But there are times where you must be very careful and not put any more money in the pot. And there are times you want to put as much money as possible in the pot. So just conviction is not everything. You have to rely on facts and take the right decision every time something new happens. So we talked when we were still below resistance, and now we are above resistance. So the situation is not the same, and we have to think about the market again, you know. And you just cannot be I'm sure we go to 100k, or I'm sure we go to 1k. You cannot be so convinced in your opinions. You have to know that it's just a probability, and even if you're right, which is easier in poker up to a certain degree, because everybody knows that pocket aces is the best card you can get. But in trading, not everybody knows that this candle this candle is close to pocket aces. Maybe not pocket aces, maybe pocket queens or pocket jacks. But this candle, the red candle here, you should have thought, if you know something of cycles, to go long, because there was a good probability that that wasn't the top, and we go higher. But you should have taken the risk, you know. If it goes bad, well, you get stop out. You put your stop loss just below that candle with the big wick, which shows you that there's a lot of buying power. And if you get stop out, so what? You don't lose too much, you know. You can afford a lot of losses if you have great trades like this one, when you go long on this candle. And I showed you a couple of indicators who told you that. And you hold it, even if you only hold it to new all-time highs, it still would have been a 30x reward, you know. So a couple of trades, they set you up all really fine. Now, of course, you will have a lot of losing trades. I had a lot of losing trades this year, but I don't mind. As long as I can manage to survive, as long as I should make more money than I lose, you know. But I'm talking all the time, and I'm interested in your opinion. So tell me what you say, what you think, and what you want to add to my rant.
Basically, in my opinion, right now I'm looking for a pullback, and then I'll try to enter for a long position again, because it's in a uptrend right now. So as long as we are in an uptrend, I'll be looking for only doing the long positions. So once we start going in a bear market, I'll be putting all the money creating the short positions only under my risk. Like, I'm not gonna put all the money in a single time, like as you said, in a single pot. I'll be risking like lesser money per trade. That's my way of trading actually. Like, if I want to risk any trade for an intraday, I'll be risking 1% per day. So if I'm gonna lose 100 trades, then I'm gonna lose my whole capital. and that is very certain. Like I'm not gonna lose 100 straight trades, right? So if I'll be risking 1% per trade, let's say, so my risk to reward ratio will be, I only take trades where risk to reward ratio is at least 1:2. So that is why I am focusing on risk to reward ratios and risk per trade percentage. And as far as the charts are concerned, I'm only looking for long positions until we are in an uptrend. That's what I can say.
Okay, great. So thank you for your time. I enjoyed talking to you, and I'll contact you again when I feel like talking about the markets again. Thanks a lot. I enjoyed.
Okay.
I enjoyed seeing you.
And I do remember you were talking something like signals. You sent me some message regarding the signals. What was that about?
Oh, Signal is just like WhatsApp, but it's more private orientated. And I use a different app. You can check both of them. Signal, you can set it up, but I use an app. It's called Beeper, and it gives me all the charts. So it gives me. Let me just look at the networks. It gives me, for example, my SMS, my Signal, my WhatsApp. There are different messages such Messenger, Telegram. It also gives me Instagram, Link, X, Discord, and Slack. It gives me all that in the same app. So I actually don't know if you use Signal or WhatsApp. It's better to use Signal because it is more private oriented. So there's less.
How can I help you for the signals? I mean, I know what is signals, but how can I help you regarding the signals?
You're not talking about the app. You're talking about what signals? About the trading signals?
Yeah. You send me something like if you're interested about signals.
No, I was talking about Signal, the app, just to write your messages. I was not talking about signals in the market.
Mm-hmm. I mean, how can I help you regarding the signals? Is it something that you wanted
Are you talking
to?
about the markets or talking about chat messages we send to each other? I'm not sure what we're talking about.
I thought you were saying something like you want to start the business regarding the signals. I thought that.
No, I didn't say that. No.
Okay. So maybe I miscommunicated it.
Okay. Anyways, I enjoyed talking to you, and I hope I'll see you soon again. Thanks a lot for your time. Bye bye.
Okay, thank you for your time.
And thank you for making time on a short notice. That's also very nice.
Okay, thank you. And please leave a feedback. Last time you didn't leave any feedback for me.
Okay, I'll try. Bye bye.
Bye bye. Take care.